The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to a Bill in Boca Raton. Hey, Bill, what's going on?
Not too much. Enjoying the warm weather in Florida just like you, except on the other coast.
Perfect, man. Perfect.
Yep.
Do you listen on the internet right now?
Yes.
Cool, man. Cool.
No, I enjoy that. That's in your Tiger TV and everything. I've been watching you for years, and you've really taken this whole programming to a level that's just phenomenal.
I appreciate it.
And now, here's Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. Well, 5 days a week we go, 2 hours a day we go, 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our 4 agreements. This is a beauty, especially for today. Surrender and let go of the past. Whatever life takes away from you, let it go. When you surrender and let go of the past, you allow yourself to be fully in the moment. Letting go of the past means that you can enjoy the dream that is happening right here, right now. Yesterday's gone, tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. Up, down, all around. Get on that saddle, folks, because we got a bucking bronco here. Dow Industrials up 429, NASDAQ up 124, S&P's up 59. Gold contract up $25, trading out at $1,753 an ounce. $1,738 an ounce. Silver down $2 at $37.47. Platinum up $36, trading out at $1,753 an ounce. Copper up 7 pennies at $4.04 a pound. Light sweet crude flat at $80.95. Bonds up 36 at $136.06. And we will get back to the bonds, folks, because what a ride this was after the 215 Federal Reserve statement. They got up to 139 and then basically gave it up in about 30 seconds. Dollar index down 78.6, trading out at 74.15. Euro up 15 at 143. Yen down 82, trading out at 76.95. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do we do out here? We got to 1101.54. You rejected that price. We did 2.3 billion versus 2.5, and it went topside in a big way, folks. That's your S&P. Dow Industrial, same setup in the Dow. What the Dow did is this. Dow got down to 10,604, closed out at 11,239. You talk about pretty wild 600-point swing. Now, okay, let's go to the NASDAQ next, and then we're going to talk about what we had here, because intraday it was just it was wild. Making a heavier bottom, a better bottom, folks. For all you bulls out here, this is a much better bottom than we had yesterday, than we would have even had. Well, let's go through it first. NASDAQ Composite, this is what the Composite did. Composite got to a low, 3.7 billion versus 4 billion. NASDAQ took everything back from yesterday. We got to a low of 2331, closed out at 2482. That says the bounce is on in a big way. We go to the 3 Qs. You look at the 3 Qs. What the 3 Qs did is this. 3 Qs go from a price point of 49.93. Close out at 53.03, which is right at the high of yesterday. Okay, so let's go through a few deals here first. At 2:15, folks, the Federal Reserve came. Well, first off, we have to go into last night. You know, I know I don't expect you to be in front of computers all night long, folks, but what you had last night is this. Over in Asia, you had the same type of trading that we actually had intraday here today. That's the type of trading that was done. We were down, up, all around by huge amounts, absolutely huge amounts, folks. Our futures out here today, what you had is that bottom line, they go positive. When Bernanke came out with the Federal Reserve statement, stayed positive for a bit. Dow goes negative, NASDAQ goes negative, S&Ps go negative. Now, as they were going negative, folks, I was watching this, and of course, you know, my whole deal is how do you come against strength with volume, without volume? Now, if you're watching this on Tiger TV, I'm going to put this up, because when this was happening, the bottom line is that you can see that, I could see that I'm saying to myself, oh man, this is going to make a better bottom than we actually had. And the reason being is that before that had come down, the characteristic was like, okay, you're going to get a decent bounce. Well, bottom line is that what you had is this. Your first acceleration down at 1420 just did not have enough acceleration coming into the swing point. You got to, if we look at the Qs, you got to 50.82. The bottom line is it had to go blow out 50.62. You know, it got down there, but bottom line, as soon as it got down there, hit it, took off, and that sets up, number one, a bottom that will accelerate more. The reason we'll accelerate more is this, is that the acceleration, we had huge 8 days, 9 days down. The acceleration in volume and price spread was absolutely monster. Then what we had today is that you actually got to a lower low, you had the lighter volume, and that's what you need for a much larger bounce. So bottom line is that, you know, you can expect, it's interesting because Steve and I, when we were doing the show this morning, I was talking to him, I says, you know what, I don't know what Bernanke's going to say, but I know one thing. It's going to be an acceleration, it's going to be huge, and it's going to be something that many folks, particularly the bulls out there, will say that, oh, no, this will go back to the highs. And the bears, meaning I'm still a bear, you know, we're long at this point, but the bottom line is that it'll get you thinking that, okay, hold it, you know, can we get up to those price points? So that's on a technical basis. On a technical basis, and what we'll know is that as we move higher, and I expect them to move higher, you know, next week, week and a half, no doubt, folks. That's the way this is set up right now. But if we see the volume contracting, well, this baby's not over. That's the first part. Now, let's talk about the fundamental part of it. Fundamentally, folks, this is what you had happen. Bernanke come out today and said that he is, and the Fed, are going to keep rates low through mid-2013. Now, they also said the recovery is slower than expected. Well, we all knew that. The rates being low, folks, for that much time, 2013, is a dynamite deal for everyone, for every community, for every state, for every citizen, bottom line. And this is why. Because there'll be decisions made now. And those decisions, I suspect, what it will do is it'll get the housing market off the bottom. You know, I'm bull on housing anyway. But what you need is that we all need housing to come off the bottom. The reason being is that housing generates so many jobs, folks. I don't care whether you go from the landscaper to the plumber, to the electrician, to the builder, to the architect. All of the above is important because it puts a huge amount of people to work. What we have had is that all the stimulus thus far has only gone into the banks to keep the banks alive. What we need is that you need the cash, and you need people that have cash to make decisions to get productivity going higher. That's what we need, and I suspect that's what we're going to get. Now, there's no doubt low rates hurt retired people big time. There's no two ways about that. Between the CDs and hurt, there's no doubt about that. The real, well, that's bad? Yes, that's bad. If you're in that situation, that's a bummer. Bottom line, though, when you take the whole ball of wax, if in fact this can get housing off the bottom, what you'll see is that everyone will make more money. And that's what you need. Forget the banks. The banks, what I'd like to see next is this. What I'd like to see is that the Federal Reserve stop paying interest on the reserves of the banks. Because if they actually stop paying interest on the reserves, what that's going to do is that's going to push more cash into the system. You know, it's kind of like the Bank of New York last week, folks, what they did is that they turned around and they were saying that any of their commercial customers that are leaving more than $50 million on deposit, instead of the bank paying them, they wanted the client to pay the bank. Well, the Federal Reserve, what I'd love to see is that the Federal Reserve turn around and say, you know what, we're kicking you out, that we're going to penalize you for having too much cash. They're going to push that cash out into the marketplace. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Let's take a look at some of the high-volume stocks out here today. We had BAC was up $1. You had General Electric up 53 cents. Citigroup was up to $3.87. You had Wells Fargo up $1.85. JP Morgan Chase was up $2.33. And let's see. Charles Schwab was up 17 cents. You had Yahoo up 99. U.S. Bancroft was up 178. We take a look at the RIM. Even RIM was up. RIM was up $1.25. Oh, let's go over to the gold contract. Okay, so check this out, folks. If we go over to gold now, well, we're talking gold. What you want to see how something is so counterintuitive? It's absolutely amazing, folks. Okay, gold last night hit an all-time high. What we did with gold is that we got to a price point of 1782.50. Now, what would make sense is that when there's free money in the marketplace, right, it would absolutely make sense that you'd expect that gold would reach to a higher high. Well, bottom line is it couldn't handle it. The reason it couldn't handle it, folks, is this, is that there's a time frame now, and that time frame being mid-2013 is a big number for productivity to get going. So you're going to see something that's absolutely counterintuitive. What was happening and what the market was showing us all day long here today was that silver couldn't move, and in particular, what you did have is that the actual price of gold went over the price of platinum. Platinum right now is $17.49 an ounce. Gold is out there at $17.37 an ounce. Intraday, gold was actually higher than platinum. That doesn't happen a lot. It does happen. It happened in 2008 also. And what the difference is that platinum, folks, is a harder metal to mine, number one. It is more precious, number two. The difference, however, is that platinum is has an industrial use also. I think platinum's a much better deal. If you're buying something, if you're in that context, folks, you want to be buying. If you think that gold is good at $17.38, you want to buy platinum at $17.49. The difference is absolutely dramatic. Well, anyway, but that if you're going out there to do something, that's where you want to put your head into. Bonds. Let's go over to the bond market. What we did with bonds out here, absolutely wild. Intraday out here, folks, the bond got to 139.27. 10-minute spike all the way up there, and check it out. And 10 minutes later, folks, it's back trading at 135. Just so you understand that acceleration up and down, we'll be right back and explain it for you.